Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter and social media. I'll interject my financial opinions as I go through it. It's generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive in. Let's take a look and see what people are sharing. If you want to follow me, it's at @finance. And if you want to join our community, findinghighvalue.com. I dive deeper into all this stuff, looking for potential investment opportunities. I do a lot of training on there where you can learn how to invest and to see what I look at and how I am approaching the markets. May Day coupon is still active for those seeking a discount for both the monthly and yearly memberships. Investment wisdom: no matter how great the talent or efforts, some things just take time. One of the things that reminds me of is working out and gaining, we'll say, strength, very, very strong strength. It takes time for a lot of people. There are some naturals, but it still generally takes time for them to build not just the muscle and the effort and the nutrition, but also the form required to get strength and do it in a healthy manner, keeping your joints, strong and stuff like that. Natural gas looking healthy. Coal follows eventually. So natural gas is starting to break its downtrend here in the short term, looking fantastic. We've got TTF gas that also looks very strong, working its way on up. And then I think coal is going to eventually follow and break out with time. So that's kind of my viewpoint there. Natural gas looks strong, and I think coal will eventually follow. We've got Chevron and Exxon Mobil. And what I say is the charts look bullish to me, and I'm going to say leaders are going to lead. And the leaders, we should take cues from the leaders. So if the energy sector is starting to break out and break out of their patterns, they're sitting on top of big patterns. The consolidation is 1, 2, 3. It bottomed in 2020. This was the first move out of the consolidation. We are sitting on top of the consolidation, consolidating, ready for another move higher. Now, does that mean that we break out of this downtrend immediately? It doesn't mean immediately. What it means is that the setup is there, and it will eventually, in my opinion, most likely with statistical probability, break to the upside based off of technical analysis and based off of the cycles that we're seeing in the markets. Now, some people will say, well, what's a catalyst? Well, the catalyst doesn't matter, guys. The catalyst will be found after the charts and the positioning, and there's money positioning and energy right now for that ride. So these are the leaders. The leaders are starting to bust a move potentially. That's Chevron. There's it zoomed in, almost ready to break out of that trend line. We've got Exxon Mobil, which has the 1 hump, 2 hump, 3 hump, and then the crash, the COVID crash. This is the first wave up out of that consolidation. And then generally, you consolidate on top of the big consolidation back here. Now we are starting to try to break out of this consolidation that is on top and start our move higher. So this is a big deal. Why is it a big deal? Because we can look at the laggards that are that have fallen way behind, and we could potentially buy really high quality, cheap, small and mid cap companies that will eventually follow the leaders of ExxonMobil and Chevron. And that's exactly what I go over on the website. I go over what companies I see that do insanely, like insane things. One of the companies that I invested on the YouTube channel and shared it with everyone, go back and look at my old videos. The company is SM Energy, and that looks good too. It has a very similar pattern to all of these. It has a falling kind of channel flag pattern. Off of the 2020 bottom where I had purchased it, I am up 20 to 30x depending on the day that you look at it and the volatility. 20 to 30x since 2020. And those are the companies that I look for. I'm not looking for a Chevron necessarily. We're using these as leaders and indicators to guide us from what is potentially coming. Then I look at the risk reward of the companies that are growing. And I don't think there's a ton of companies in the world that can grow production very quickly out there. So there's a small handful in the world that can grow production rapidly. And I think in an increasing price environment for oil, that they're going to be rocket fuel, where they're going to go up 10, 20, 30x potentially, depending on where you got in. Some of them are going to be 100 backers. Maybe not from where we are today, but from the bottom of 2020, they could potentially be 100 plus baggers. We got wifey here. Trader equals retard. If you move it around a little bit, I just thought this was funny. Um, I kind of agree with it though, to some degree. It seems like, and this is just my opinion, the people who trade a lot are people just they haven't been in the market that long. They don't know how to size up the big trends. They're still learning that stuff. So I'm not a huge trader. I'm a much um, better longer term investor where I look at the setup, I size it up, I get in, and then I can hold. And I've made so much more money doing that than trying to trade my way to success. Jesse Colombo says gold's breakout is still in its early stages. If history is any indication, and in gold we trust, the gold breakout compared to historical breakouts, we're real early in this move. Look, we're right up here, and look at all of the other gold bull markets. 2007, that was a long one. We had a pretty violent move in 1978. That's a big boy move that went vertical. And then also 1972, which is this guy, I think it's this guy here. This is a really, really strong bull market there, moving all the way up. If you correlate these moves to pricing, they ended at the average is about right here. We would have an average move about $6,500 an ounce if it hits the average. 1978 would put us at 10,500. 1972, starting there, ends us at about 9,500. And then 2007, looking back there, we would probably end up somewhere in the $6,500 range or slightly underneath it. Allie says, can we be real for a second? None of my friends are happy at their engineering job. Change, can you please change my mind that there are companies that care about their engineers out there? No. I was an engineer. Um, at first, you're excited to get a job. You want to get in there, make a difference. Then you realize you're just a pawn in the game. They don't really care about you. Not saying that they have to care about you, but they don't. A lot of companies don't pay that well either. Of what I found, depending on the sector industry you're in, I think the most lucrative areas. If I were to do it all over again, I think oil and nat gas would be a good spot to go potentially. Chemicals, something to do with chemicals, chemical engineering or something like that. Working with oil and gas or refining could be good. And I think those are a little bit better areas because you can make a lot of money. And if you were to be an engineer now and make that money there, I think you'll probably make between probably like 100 to 200,000 would be my guess. And then take that money, invest it in the company in an oil bull market. That would be perfect. That would be awesome. Cuppy says, burn it all down. There are probably, so I was talking on Discord, just to go off tangent here, to someone, and they said, well, how can people afford a house? How can people afford things? And I told them the root cause is your currency. It is inflation of the currency. And then what that allows to happen is government can do whatever they want. They can just print money, give it to their buddies, and print all this thing with no constraints. And what it does is it steals purchasing power through the currency from those who are adding value to the economy. And these are people that do not add value to the economy. So what this is referring to, it says there are probably 100,000 plus people in the greater DC area in the government sphere, government employees, lawyers, lobbyists, think tanks, and NGO grifters who are now worried about losing their jobs. They've got fat mortgages, Mercedes payments, and school fees to worry about. And as they admired the diplomas on their walls and sneered at the problems of everyday Americans, they thought the grift riddance. And since I know some of these people, I can say that the best part of what's coming is that these pseudo intellectual wannabe elites shape and build their entire identities as human beings around what their job title is, what airport lounge access they have, and what cocktail parties they get invited to. The entire world is about to get turned upside down, and it couldn't happen to a more odious and vapid group of people. And I agree, we don't want these people if they don't add value to the system. And I was talking about how could you fix the system? How can you get regular people who work in order to afford, the regular house? And what I'm going to tell you is you must stop the currency printing. Inflation and the ability to create credit is the problem. It is the root cause of the problem. Then you've got people handing this money out to all of these people where they shouldn't exist in a normal free market economy. You probably have 50% of the jobs in the United States that shouldn't even exist in a free market economy. I'm gonna tell you why real quick. The reason they shouldn't exist is because government is putting subsidies, they're putting things in place to distort market signals. And then entire sectors and industries will get built around distorted signals. And that money needs to keep flowing into the distorted signals because if they don't, it will crash under the weight of itself because it's not supposed to be there. So then what happens is you get uncontrolled deficit spending. And all this money goes to all these people that are just freeloading on the system. They are freeloading on the system. Now, what happens when those people get cut off? Well, the economy has to totally reconfigure itself. The people who are adding value, the value adders are people who create products and services that people want and are willing to pay for. They're not subsidized. They're not government jobs or employees. They're people who have found a need or a want for something and are filling that need and want for people. And if you get rich off of feeding the needs and wants of people, then you should be rich. You shouldn't be rich by creating currency and handing it out to your buddies and handing it out to your friends and political parties. That's the whole reason we have gold and silver as money because it prevents that from happening. But since we went off the gold standard, there's nothing preventing that from happening. So what happens is you get this money printing that comes into the system and it steals the purchasing power out of the currency. It puts a whole bunch of money in the hands of people that shouldn't have it, that produce nothing. And then everybody fights for houses and food and all these other things where they don't produce any food or housing for anybody. So we've just got a bunch of people that don't do anything for the most part. They don't create value and they get money. And then we compete against those people that are getting money um, from a money printer, which steals all the currency's purchasing power. All the currency they're creating is stealing purchasing power from it. And there's no subsequent value being added by those people back into the market. That's the problem. The problem is the currency and the ability to print the currency and create credit. And then the second thing is you must restrict who can vote. Because if people who have no stake in society can vote, they'll vote politicians in to take from those that are hardworking and are rich, to steal from them through government, a third party. And then eventually, what they'll vote for is to steal it through the currency. And then you end up where we're at today. So you can't have random individuals come in that have no stake in society and be able to change the stakeholders in society. That's where we came up with limitations on who could vote in the beginning of the Constitution, and that's why they made gold and silver the backing of the Constitution, because you cannot create it from nothing. They knew the problems with fiat currencies. Chamath, so this is Chamath breaking. Trump tabs Chamath Palapalapla to head the Small Business Administration because of his innovative plan to create thousands of new small businesses by destroying large ones with SPACs. He has destroyed a lot. Odell Beckham Jr. So Odell, the perfect financial advisor here. So who said taking my Rams salary in Bitcoin was dumb again? And of course, everyone is FOMOing into Bitcoin. I think we're getting close to a top here. Dan says, drill baby drill won't have a big negative impact that most think. So here's Exxon's CEO. I don't think U.S. production is constrained. So I don't know that there's an opportunity to unleash a lot of production in the near term, because most operators in the U.S. are already optimizing their production today. It says rather near-term Trump impact on oil is return to first-term priority to hit Iran and Venezuela economically by cutting their oil exports. Discussion below. Coming back. We've got JC Parrots. Robinhood added Pepe the Frog to the platform today. Now it's much easier for investors to participate in the Pepe secular uptrend. It's now pushing an 8 billion market cap. Guys, this is what a bubble looks like. This is what it feels like. You have Odell Beckham Jr. tweeting about Bitcoin. You know what that's called? Bubble. You have Pepe the Frog making new all-time highs. And you know what this is a larger, bigger picture of? All of these things that we are visually seeing here are a function of a larger, bigger end of trend bubble. The bubble is in technology. The bubble is in crypto. The bubble is a big end of trend move of interest rates ending. And I think we're going through it right now. The blow off top is right now. Planning the Bitcoin 100K party, they're already stacking and counting their cash here, guys. They're counting it. Michael Saylor's coming in here. The world's biggest joke is being perpetrated on Bitcoin investors into believing it's an asset. The irony about the supposed decentralized Bitcoin market is that it is being propped up by U.S. Treasury debt funneled into Tether. The debt propping up Bitcoin. The Tether market cap and the Bitcoin price are going up in lockstep. Now let's dive deeper into this. It's a couple ones below it, and we'll dive deeper into. So Mikkel says core inflation on the high side the third month in a row and high compensation plans in NFIB. Tax cuts, labor force effects from deportations. Perhaps time to dust off this golden oldie again of Trump elected red sweep and potential inflation coming, just like the 1970s. Very similar chart pattern and fractal. Garrett Goggins says another silver deficit of 180 million ounces in 2024. Decreasing supply matched with exploding demand from electronics, solar, and EVs is an explosive combination. We continue to run silver deficits. And your deficit is this amount here, and this is the deficit number as you look across. So here's the Tether alert. This is where I want to read real quick about what's going on with Bitcoin and what is driving Bitcoin, perhaps. So this is from Bob Coleman. The idea that Wall Street is embracing Tether and Bitcoin is much clearer. The more Tethers are being bought, the higher Bitcoin goes. The higher Bitcoin goes, the more Tethers are being bought. As Tether grows in size, the more US Treasury debt is being purchased by Tether. Tether is now holding over 84 billion in US T-bills, up from 28 billion in 2022. Tether is becoming a substantial buyer and funder for the US government debt. Oddly, as the Bitcoin community is heralding the digital asset space as the price is surging, what they may not realize is that Bitcoin is being used to attract funds to Tether, which is funding and backed by the US Treasury debt. The idea that the new presidential administration is supporting crypto is in essence to find another buyer for US Treasury debt. By attracting investors, Wall Street makes money and fees by creating new digital industry, which adds depth and liquidity for this digital asset class. At the end of the day, this industry is being born to help support US government deficit spending and treasury issuance. Is there any wonder why a large entity has had a free pass by not providing audited financials over the years? If Tether is a growing buyer of the US government debt and one of the largest funding vehicles for Bitcoin, then any material price decline volatility in US Treasuries may have a direct impact on Bitcoin's price. Is Bitcoin really an alternative asset or dependent on the US legacy system? Do not take my word for it. The video below adds much more clarity. Please repost. So that sounds a little bit crazy, and maybe it's true, maybe it's not. The fact that Tether's got all this means that I don't want to touch any of this stuff. I don't want to touch any of it. Now, some people say, well, look at it go up. FOMOing. You're FOMOing into things. What you need to do is you need to find what is of good value in the system and chase value. That is what protects you from getting slaughtered by buying at a potential peak. Because I don't know where the bottom is. If this stuff is found out to be, we'll call it, if Tether is somehow corrupt, what happens to Bitcoin? I mean, that would be devastating if something were to be wrong with Tether, if there was something wrong with it, which I kind of think there is. Breaking, Bitcoin has conquered the world. Led by President Trump, major governments of the planet are committing to the cryptocurrency. We've got Max Kaiser here. This guy's gone crazy if you listen to him. Used to be a big gold and silver guy, but then went total crypto nuts. To me, this all looks like a top, to me. But again, I'm not participating in it. If it continues to go up, fine. If it goes down, I don't care. That's fine too. Rule number 1, most things will prove to be cyclical. Rule number 2, some of the greatest opportunities for gain and loss come when other people forget rule number 1, that most things will prove to be cyclical. Sentiment is cyclical. The bigger, longer term cycles, they're cyclical. They just are on a longer wave. And what you want to do is you want to buy something that is out of favor, which is out of cycle. You want to buy when there's a lot of fear in the market, and that's generally the best opportunity to buy. And that's exactly what I did with oil in 2020. I also did it with gold in 2022, and platinum and silver. Grady says gold is now right back at the now 8.5-month uptrend lines, the lower line. Plus right now also at the blue rising wedge apex coming up from here. So we're all at that area of potential support for gold at the 4-hour spot here. So maybe we see a turnaround at some point. This is Charlie Bolello. It says ratio of emerging markets to U.S. equities is at a 25-year low. Back to March 1999 levels. And you know what I would buy in March of 99? Emerging markets. You know what I would buy here? Emerging markets. Like, it's that simple, guys. This is your cycle. Your cycle goes up, it goes out of favor, it goes up, and it goes out of favor. We are out of favor right now, and I think that we're probably pretty close to a potential bottom. Now, does that mean just because something's out of cycle that it will reverse quickly? It does not mean it will reverse quickly. It just means that we are cheap. So what I would do is I would take a long-term approach and I would buy US markets at the top here and I would buy emerging markets towards the bottom. And then what that does is it increases your probability of success so long that you can hold on. And I'm going to go back here. Rule number one, most things will prove to be cyclical, your up-down cyclical nature. Rule number two, some of the greatest opportunities for gains or loss come when other people forget rule number one, that most things are cyclical. Technology stocks in US are in a bubble. Emerging markets are out of favor. That's where you go. It's that simple. Then you have to change your mindset and say, you know what? I'm going to be in this for the long term. I'm going to acquire assets. It may take a couple of years to bottom out, and then we start to work our way on up. It is that simple. Now, some people will say, well, what's going to be the catalyst or what's going to cause this to change? Your catalyst will be known after the fact. You have to buy before other people buy if you want to cost average in at low areas. That's what I'll say. And we can use technical analysis to see when the downtrend lines break and all of those things. Uranium, long-term or weekly long wedge into a channel support. So we're right at support for uranium futures pricing. That looks and that's what I've got for today, guys. Thumb up for the content, subscribe to the channel, subscribe to the website. Mayday coupon code is still active, and we'll catch you guys later.